Welcome to Newsbeacon, your trusted source for breaking headlines, global insights, and sharp analysis from around the world. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an update. For decades, the corn trade between Canada and the United States was simple. Canada needed more corn than it could grow, and the US had plenty to spare. The American Midwest, with its vast, fertile lands, produced an abundance of corn, far more than the US could consume domestically. The American Midwest, a sea of cornfields, supplied Canadian businesses with ease, trucks and trains crossing the border year after year. This seamless exchange was a cornerstone of agricultural trade between the two nations. It was efficient, reliable, and mutually beneficial. Farmers on both sides of the border thrived, and the economies of both countries reaped the rewards of this symbiotic relationship. But nothing stays the same forever. Over time, changes in technology, climate, and market demands began to influence this once stable trade. Slowly, the relationship has shifted. Canadian farmers started experimenting with new corn varieties and investing in advanced farming techniques to boost their own production. Canada is now exploring new options, realizing the US isn't the only game in town. With global markets opening up, Canadian corn is finding new destinations across the world. This isn't a dramatic breakup, but the partnership is evolving. Canadian farmers are diversifying their markets, seeking stability and growth in a more interconnected global economy. Changes in farming, new global sellers, and even the weather are reshaping the North American corn trade. The dynamics of supply and demand are more complex than ever before. The once simple story of two neighbors is now a complex, global puzzle. The corn trade has become a multifaceted network of international relationships and economic strategies. Let's break down why Canada is shopping around and what it means for everyone involved. From farmers to consumers, the ripple effects of these changes are far-reaching and significant. If Canada isn't just calling the US for corn, who's on speed dial now? 7 new countries, Brazil, Argentina, Ukraine, Romania, South Africa, Serbia, and France, are now in the mix. Brazil and Argentina, with opposite growing seasons, offer fresh corn when North America can't. Ukraine, despite its challenges, produces high-quality corn at competitive prices. European countries like Romania, Serbia, and France are closer to Canada's Atlantic ports than you'd think, making shipping efficient for eastern provinces. South Africa adds another southern hemisphere option. With all these suppliers, Canada can shop around for the best deal. If one country raises prices or runs short, there are alternatives. This diversification gives Canada more negotiating power and reduces dependence on any single source. It's smart business in a global market. The biggest reason for Canada's shift? It's growing more of its own corn. Canadian farmers have developed new varieties and adopted better technology, boosting yields in places like Ontario and Quebec. This year, Canada's harvest is projected to hit over 612 million bushels, a record. More homegrown corn means less need for imports. Local supply supports the economy and can be cheaper and more reliable than cross-border shipments. The buy local movement isn't just for farmers' markets, it's reshaping national trade. Canadian processors now look to local farmers first. This self-sufficiency is the foundation of Canada's new approach. It lets Canada be more selective about when and where it imports corn. Meanwhile, just south of the Canadian border, a remarkable scene is unfolding across the heartland of the United States. U.S. farmers are in the midst of harvesting a record-breaking 16.7 billion bushels of corn, a figure so massive it's hard to even imagine. From sunrise to sunset, combines roll through endless golden fields, gathering up the fruits of a year's hard work and hope. This year, perfect weather conditions and advances in farming technology have combined to create a bumper crop. The result? A massive surplus, over 2.1 billion bushels of corn left over, more than enough to fill every barn and silo from Nebraska to Ohio, with plenty still spilling over. Imagine baking 500 cookies for just 100 guests. There's simply too much to go around. Sellers are now scrambling, searching for buyers to take this mountain of corn off their hands. Storage facilities are bursting at the seams, and the pressure is on to find new markets before the grain loses its value. To tackle this challenge, the USDA is aggressively pushing exports, aiming to ship a record 2.9 billion bushels of corn to countries around the globe. Every day, cargo ships are loaded at American ports, bound for distant markets in Asia, Africa, and beyond. But there's a twist. Canada, which for years was a reliable and steady customer for US corn, is now buying less than ever before. Changing trade policies, shifting demand, and increased domestic production have all played a part. This means the competition is heating up. With Canada stepping back, the US must look further afield, targeting new buyers in unfamiliar markets. The race is on to secure deals before rival exporters swoop in. Even with a mountain of corn at their disposal, American farmers know that sales are far from guaranteed. The world market is crowded and every bushel unsold is money lost. Now the US faces stiff competition from agricultural powerhouses like Brazil and Ukraine, who are also eager to claim a bigger share of the global corn market. It's a high-stakes contest, with each country vying for the attention of international buyers. Having the most corn doesn't guarantee success anymore. It's all about building relationships, negotiating deals, and adapting to rapidly changing market conditions. The rules of the game have shifted, and only the most agile will thrive. For American farmers, this means facing new challenges in a market that's more crowded and unpredictable than ever before. They must rethink their strategies, innovate, and stay resilient in the face of uncertainty. The old assumptions no longer hold. In today's world, growing the biggest crop is just the beginning. The real challenge is finding a place for every kernel. For big buyers, price is king. Canadian companies now compare US corn with offers from Brazil, Ukraine, and Romania. Even with low US prices, shipping costs can tip the scales. Sometimes it's cheaper to ship corn from France to Quebec than from Iowa by rail. Countries like Brazil and Argentina have efficient ports and favorable currencies, making their corn even more competitive. Canadian importers weigh all options, choosing the lowest landed cost. This global price war puts pressure on US sellers. They can't rely on habit, only on the best deal. For Canada, it's a buyer's market with more choices than ever. Competition ensures they get the best price, wherever the corn comes from. No matter how advanced farming gets, weather is the ultimate wild card. A drought in one region can open doors for farmers elsewhere. This year, while the US enjoys perfect conditions, Europe and Serbia face heat and drought, shrinking their exports. When one supplier falters, buyers look elsewhere, sometimes back to the US. That's why Canada diversifies, to avoid being caught by a single region's bad luck. By sourcing from both hemispheres, Canada hedges against weather risks. If North America suffers, South America can step in, and vice versa. It's about not putting all your eggs in one basket. Global weather shifts can redraw the supply map overnight. Diversification is Canada's insurance policy against nature's surprises. Beyond weather and price, trade rules shape the corn market. Agreements and tariffs can open doors or slam them shut. The US and Canada have enjoyed smooth trade, but policies can change fast. Tariffs make imports more expensive, and trade disputes can erupt unexpectedly. Relying on one partner is risky. Politics can disrupt supply overnight. New trade deals with Europe or South America can make their corn cheaper and easier to import. Some countries subsidize exports, lowering prices further. Canadian buyers care about the final price, not the reason behind it. The global web of rules gives Canada more options than ever. In this chess game, flexibility is key. So what does all this mean for American farmers? They've produced a record crop, but a shrinking Canadian market means more competition and lower prices. With a surplus and fewer buyers, prices drop, squeezing farm profits. Farmers must now compete globally, not just locally. US exporters are hustling to find new markets in Mexico, Asia, and beyond. Industry groups push for policies to boost domestic demand, like more ethanol. The lesson loyalty and proximity aren't enough anymore. To win business, even from neighbors, you need the best offer. The American farmer faces a tougher, more complex world. Adaptation is the new reality. The simple corn deal between Canada and the US is now a thing of the past. For decades, the relationship was straightforward. Canada bought American corn, and American farmers could count on a reliable northern customer. But the world has changed, and so has the corn market. Today, the North American cornfield is at the center of a much bigger, more complicated story. Canada's global shopping brings stability, better prices, and less risk. By sourcing corn from a variety of countries, Canadian buyers can avoid being tied to a single supplier. This flexibility means they can take advantage of the best deals on the world market and shield themselves from sudden price spikes or supply disruptions. It's a strategy that's paying off, giving Canadian consumers and businesses more options than ever before. For the US, it's a wake-up call. Even record harvests don't guarantee easy sales anymore. American farmers are facing new challenges as their traditional markets become less predictable. They're learning that simply growing more corn isn't enough. They have to find new buyers and adapt to changing global demand. American farmers must innovate and compete worldwide. This means investing in new technology, improving efficiency, and finding ways to stand out in a crowded global marketplace. It's a race to stay ahead, and only the most adaptable will thrive. Canada will keep its options open, buying wherever the deal is best. Whether it's corn from the US, South America, or even Eastern Europe, Canadian importers are always on the lookout for the best combination of price, quality, and reliability. This open approach gives them a powerful advantage in a volatile market. The US will remain a major supplier, but exclusivity is gone. American corn will still find its way to tables and factories around the world, but it will have to compete for every sale. The days of guaranteed markets are over, replaced by a new era of competition and opportunity. The North American corn market is now fully global, volatile, competitive, and fast-moving. Prices can swing overnight and fortunes can change in a single season. Traders, farmers, and buyers must all stay alert, ready to adapt to new realities at a moment's notice. A good harvest in Canada affects Illinois. What happens in one region can ripple across borders and impact farmers thousands of miles away. The interconnectedness of the market means that every decision, every weather event, and every policy change matters more than ever. A drought in Europe changes Brazil's fortunes. When crops fail in one part of the world, opportunities open up elsewhere. This global web of supply and demand means that every country is both a competitor and a potential partner. Trade policy in Ottawa ripples to Nebraska. Decisions made in government offices can have real consequences for farmers and businesses far beyond their borders. Tariffs, trade agreements, and regulations all play a role in shaping the future of the corn market. Buying and selling corn is now a complex global dance. It's a world of shifting alliances, fast deals, and constant negotiation. Success depends on staying informed, being flexible, and always looking ahead. For both countries, it's a new era. More choices, more competition, and a lot more to think about than just the neighbor next door. The future of the North American cornfield will be shaped by innovation, resilience, and the ability to thrive in a world where borders matter less and global connections matter more than ever before.